This is the best entry model for trading in 2026. Not only is this easy to spot in the markets, but it also simplifies complex trading models that gurus try to use to confuse you. I'm going to show you exactly how to use this model and how it can help you find better entries. However, being fully transparent, I am not guaranteeing results. I am not a guru. If you want to learn from someone who doesn't BS you and is fully transparent, make sure to click the link in the description. I leave all the guru nonsense out and I teach the reality of trading. Now to the entry model. This is the entry model, market structure shift, which is MSS for short, and or CISD, which is change in state of delivery for short. Basically, these two are the same thing, and I'm going to explain why. However, first, let me explain the market structure shift. So when price comes into your point of interest, which is PY for short, that is the area that you're looking for price to move away from and potentially to find an entry model at. So when price comes into your point of interest, all you're looking for is price to break a high. For example, if you were bullish, you would look for price to break a high. When it's creating a higher high, that is considered a market structure shift. The important thing about this entry model is that when it creates a market structure shift, it creates a fair value gap. Then you would look for price to retrace, and you would look to enter on the fair value gap and target higher. I'm not going to get into the specifics of market structure and all of that. This is simply just going over the entry model. But if you want to go more into specifics, look at some of my other videos where I explain that. This works on both ends. So if you were bearish, you would obviously look for a break of a low instead of a high, and the same thing on the other side. Now, changing the state of delivery. So same thing, you're looking for price to come into your point of interest. Then, for example, if we were bullish, we'd look for price to validate a bullish order block, which if you don't know what a bullish order block is, it's a down candle or consecutive series of down candles that gets validated by a green candle. So basically, this green candle or whatever green candle closes above the series or single series of down candles, then that is considered an order block, and it's also considered a change in the state of delivery, showing that price may potentially want to go up. So that's when we could either enter on the validation of that order block, or we can wait for price to come down, tap the order block, and continue higher. So why is a change in the state of delivery the same or similar as a market structure shift? Well, a change in the state of delivery is just a market structure shift, but the market structure shift occurs on a lower time frame. That is simply it. So let's say we get a change in the state of delivery on the 5-minute time frame. It's probably a market structure shift on the 3-minute time frame or the 1-minute time frame. So these are essentially the same thing, except instead of waiting for the market structure shift on that time frame that you're using, you use the change in state of delivery to get an earlier entry in the price move. So hopefully this makes sense. I'm going to show you guys some examples recently on US 30. So the one example that I showed earlier is this example. So for me, my points of interest are liquidity points. So I look for reversals from liquidity. So if we see, we took out this buy side liquidity right here, and what do we see? Well, we can use market structure shift, and we can use a change in the state of delivery. Now in this example, we actually get both. We have this low here, we have this low here. We see price does indeed break both of these lows. So we also do have a market structure shift, but another thing that we have is we have a change in the state of delivery. Why do we have a change in the state of delivery? Well, we have this green candle here, and on this black candle here, we close below the body of this green candle. So not only is this a market structure shift, but it's a change in the state of delivery. And it's also a valid market structure shift because we also have a fair value gap right here. So this is actually a really good example of market structure shift, change in the state of delivery, and a fair value gap all playing out in the same time. So you could have entered in this gap, or you could have entered on the close of this black candle. You could have targeted, put your stop loss a little bit higher, and you could have targeted potentially these lows, which our sell side liquidity. Just like that. So I'm going to show another example, which is even more recently. So if we go to price action at the time of this recording, so I believe this was from hold on a second. I'm going to show this example. So this was recently on Friday, July 26th. So this is recent price action. What do we see? Well, we see price goes below this low, which is sell side liquidity. And what do we see? Price goes below this low. And we have a series of black candles here. Now, if we zoom in just a little bit, we see that this candle right here is green. So this is this series of down candles right here. What do we see? Well, we see price on this candle breaks above this. So this would be a change in the state of delivery. This is more of a extreme example because you can see this candle was huge. It closed all the way up here. So if you waited for a retracement, you would have never got that. If you entered on the momentum, you maybe could have entered here and targeted higher. However, that is just an extreme example, but I wanted to use that as an example to show you guys change the state of delivery by itself. So I'm going to go over one more example, and I believe, yes, right here. So on 9:30, this is on the open of 9:30 on Monday. This is actually July 20th, 2026. So I said the wrong date for the last one, that's okay. We tap my point of interest, which is liquidity. We go down, and what do we see? Well, we have a series of up candles right here. These 1, 2, 3, 4 up candles. And on this black candle right here, I'll zoom in. We not only get a market structure shift, but we also get a change in the state of delivery. So you could have either entered after this candle closed, or you could have waited for this candle to retrace. We also have a fair value gap that we never reached there, but we did tap into this one, and you could have targeted lower. So that is the entry model. It's very simple, very easy to understand. Change the state of delivery and market structure shift. Hope you guys enjoyed this video. I'll see you in the next one.